Welcome back, folks. Today we're going to be talking about how to backtest the model properly. Just going over some tips on how to put the data together so you can actually know when to take action and when not to take action, what the setups are supposed to look like, and how to familiarize yourself with the high probability versus the low probability. This also helps you see blind spots that you haven't been taking action on. So yeah, let's just jump straight into it. So I have two ways of backtesting. And one of them I thought was back in the day superior, which was me just getting a bunch of data on a spreadsheet or, Google Sheets or Excel sheets or whatever. And it just tells me percentages. The issue with that is that you don't actually get pictures. And so if you don't have pictures along with every single setup, you're going to really struggle to see what the actual difference between each setup is, because every setup will be different according to the actual details inside of it. What I mean by that is, let me just open up this. It's called Airtable, airtable.com. You can download this. You can have a free trial, or you can pay the membership. But basically, this is kind of like a Google Sheets, but there's like AI involved into it. So it's a little bit easier to set up. But as you can see, like everything is pretty much like the way you would set up a Google Sheets or an Excel sheet. You have your tags, the instrument, whatever other things, and you put these tags all around. What it allows you to do is it allows you to filter stuff through like specific groups. So for example, if I hit group here, and then let's say I just want to know which bullet it's, well, now let's say, where is the results? Okay, so results, for example. So I want to see all my winners. I want to see my losers. But then I want to add a subcategory, which is, for example, which ones are on the first bullet or second bullet and so on. This will then reorganize the whole group so I can see, okay, all the first 1 bullets of the 5 minute, these were all the winners. All the first 2 minute bullet winners were here. And so it allows me to see also the losses. For example, all the losses, as you can see, like the bullet 1 5 minute have hella losses, but bullet 2 5 minute barely has any losses, right? But there's also obviously less bullet 2 trades. But yeah, you just basically can organize everything a lot faster and bring it back to normal. So it just allows you to see the data in a more accurate way of actually breaking down the data. But you don't really necessarily need this website. You can use Google Sheets, or you can use OneNote, for example. You can do whatever else people do out there. But the reason why I'm organizing my data like this now versus the way I was doing it a second ago, it's because I had a lot of pictures, and I have another application called OneNote, and I have literally, I don't know, 1,000+ pictures of my setup. The problem with that is you have what is called recency bias. So recency bias is, for example, let's say this picture here is the most recent picture that I just saw, and this is the most recent setup that I just saw Friday, for example. All right, well, for this long, there's a valid long and then there's a valid short in the same area. And so for this specific setup, if I just saw this the most recently, the problem with this is in my brain, because this is the most recent setup that I backtested or that I seen, I could have recency bias. So if I see a few pictures that look the same, like you just see a few setups that look the same and they're failing setups, these ones are winners, but let's say it was failing setups like this one's here that were 3 failings in a row. If that's the case, then I would have recency bias that this specific setup, maybe it's not as good as I thought it was, right? And if I have a lot of winners like this, then maybe I'll have recency bias that this setup is actually better than it actually was. So you will have the problem that if you don't have pictures, so delete the pictures, right? Let's say they didn't exist, and you just see this doesn't tell me the picture. Why? This tells me the details of what happened in a way that it's easy to understand, because you have to categorize things. But when you actually open up the pictures, and let's say I compare this loss here, okay, which was this trade. So if I compare this loss to the loss next to it, which is this one, these 2 trades are completely different. The context on this trade here is that this trade already had a change in set of delivery here. It was already going, and then it lost when the EOD reversed. So you can see that this is the end of day. But then the prior picture to that, we were pumping. This was 2 o'clock. So this is 3 o'clock, and EOD hadn't come up yet. And we were already CISD to the upside. So this short obviously had a lower probabilities to win to begin with. But the two pictures are completely different. As far as the setup though, they look very similar, right? 5 minute, 5 minute, 1 minute breaker, 1 minute breaker. One is short, one is long. First bullet, first bullet. So a lot of the things are similar. There's obviously some differences in the categories, but having the picture is really important, because then when I go through my notes and I sort through all the losers, so if I again go to group, go to results, and I sort through the losers and the winners, for example, all the bullet ones that were lost, I can open up those pictures specifically, put them on the side, compare them all to each other and say, okay, cool. All these bullet ones lost, but there's bullet ones that actually win, which there's a bunch of bullet ones here that actually won. So what's the difference between the two? And what can I see that maybe I can start avoiding when it's bullet one or bullet two? But you need the pictures to be able to categorize these things. So the way I would utilize Google Sheets or Airtable, if you end up doing Airtable or whatever else, is I would categorize my setups based on, of course, the instrument you're backtesting, setup type. You can have multiple setup types. Like if you're backtesting the 1 minute, the 5 minute model, and then you're backtesting the 15-minute model, and then the 1 hour model, and so on. Entry trigger will be when did you enter, the 1 minute breaker, the 15-second breaker, the 30-second breaker, whatever you end up backtesting. This is something I do, like how many candles away from a higher time frame breaker are we? So are we 5 candles or more away, or are we less than 5 candles away? Obviously, direction, long and short, standard deviations. What's the maximum that it reached? Is it -4? Is it -2? Is it a winner? Is it a loser? Bullet category will be like bullet 1 on the 15-minute, bullet 2 on the 15-minute, bullet 3 on the 15-minute, bullet 1 on the 5-minute, bullet 2 on the 5-minute, and so on. Then this is for the 15-second. If you're backtesting that, I'm backtesting that right now, so you don't have to follow that, but you can put whatever you want. Was there a 5-minute FEG or a 15-minute FEG? Is that necessary? Is that not necessary? Yeah, what type of day was it? Red folder, FOMC, NFP, day prior to NFP, day prior to CPI, and so on. And then the pictures, and then just notes for the specific stuff that I remember from that day, because I live traded all these days. So I'll have like little things that I remember from the day, so I'll just put them down. And then the valid macro, whether it was valid or not at all. Like, for example, this setup was not at all in macro, but it did end up winning. So sorry, not at all, but it ended up losing, which is obviously to be expected. But there is a couple trades in here that have been out of macro overall, and they end up winning. So yeah, I just put them down just to make sure I remember. But this is the way that I would go about it. So let's go through an example live on basically how you want to write it down. I'm just going to do a dummy one. I already did this day, but let's just say I haven't done this day. Okay, so let's just wipe it off. Clean for a second. Let me delete this. We'll delete this, and we'll delete this. Okay, so we're in the 5-minute time frame, and we'll start from here. So on the 5-minute time frame, let's go into the 1 minute on the left, and then the 5 minute on the right. Okay, so I took this trade live on Friday. I know I said I was going to take the day off, but I actually ended up trading, and I had a pretty decent day. So we're coming into the market. We have a change instead of delivery to the upside, like so. You mark that out. And when you're doing the back test, obviously back test the window that you trade. That's why you have this blue box. It's not because that's the kill zone or whatever. That's just the time I log onto my computer. I'm on the charts by 7 o'clock, meaning that's when I start back testing my stuff, because that's when I'm actually trading. If you're trading in Asia, just put the window that you trade. If you're trading in London, just put the window that you trade. You want to back test the window that you actually are going to be there for. It doesn't matter to me if Asia can have 1 million trades if I'm never going to trade Asia. I'm definitely never going to trade London. So it just doesn't matter to me that London has 1 million setups in it. That's why I don't back test it. I know it works in London. I just don't need to back test it. So anyways, so we have the CISD here, for example, to the upside, right? We then have another CISD, which is here, because this low, so it's high, low, higher, high, lower, low, because it wicks that, and then higher high. So this is a new change instead of delivery to the upside, giving us sweepable here on the 5, and then it gives us a high, low, high, giving us another sweepable here on the 5. And so we mark both of those. We then zoom in on the 1 minute here on the left side, and we look for a breaker. Is there a breaker in that area? Yes, there is. A low, so high, low, high, lower, low, higher, high, giving us a breaker here. This is bullet number 1 out of this, because there's no other sweepable that has been swept in this leg just yet. I'm sure there's stuff over here, but we're not going to worry about that because, again, this is my trading window. And so, awesome. The trigger was here. It went to 3.5. I don't ever target 3.5. I target either 2 or 4. I don't target the in-between. I don't need the data on that. So I just go for 2 or 4. Did it get to 2 or 4? Well, it got to 2. So what I would do here now is I would literally just grab the, and this candle, by the way, I know it looks like just a down candle. Well, I guess I could do this. Hold on. Just to show you guys. I know it looks like just a down candle. It's not. It actually triggered me in the order right here on this candle. Go to the 1 second because it looks boorish. So this is the line of the order. Okay, that's the line of the order. It opened, filled my order, took off, and then reversed. Okay, so this is a winning trade in the live markets. And again, I did take this on Friday, and I ended up TPing. So here, what you would want to do is you first would want to take a screenshot of this. So we're going to do so. We're going to hit copy image. Then we go on to Airtable or Excel sheet or wherever you're going to put your data, and you attach it onto the setup. So here, as you can see, the picture is now loaded up. So that's the first picture we want to do. You then want to categorize the thing. This is a 5-minute setup. It's a 1-minute breaker. The 5-minute, is it less than 5 candles to make another breaker? Yes. 1, 2, 3. So yes, it's less than 5. So we do less than 5. It's a long. It got to 2 standard deviations at the most. It was a winner. It was the first bullet. We're not going to worry about this right now. We're not, and oh, with this one we can. Was there a busy? No, there was no busy. So no fair value gap. So we leave that blank. Sorry. And then this day, was there news or was there no news? I don't believe there was any news, so we just leave it empty. There's nothing to click there. If this was a 50-minute, then I would add it on here and so on. Now, the next thing I would do with this same setup, okay, is I would then zoom out on the 15-minute and go to the exact same place we were at, which was, where was it? Here. So I would go to the same place we were at, like this, and I would take a zoomed out picture of the 15-minute, like so. And then I would do the same thing for the hourly. I would do the same thing for the hourly, so I could have the context of the hourly. Okay. I would go like that, copy, paste it, put the same box, and have it there. Why do you get the pictures for all the time frames, even though you didn't annotate anything on the other time frames? Ideally, you do start annotating them. Okay, so ideally what you do is you go, okay, CIZ to the upside, sweepable here, we swept, took off. This busy here on the hourly is valid. And so then you would go on the 15-minute and go to the same area and say, okay, is there a breaker there? Oh yeah, there is a breaker. So that validates the whole setup for the hourly. And then the 5-minute, is there a valid setup here on the 5-minute? Oh yeah, when we came back and retapped, this is a 5-minute setup to the upside. Cool. So you mark that out. You go, okay, cool, that's a valid setup here. Blah, blah, blah. And you take a screenshot of all of that. And the reason why is because you want to put it all together as you're learning this, so that when you go and look at your stuff and you go, man, why is this one setup losing so much? You then already have the context of the day. So you're going to go, okay, this was a 1-minute, 5-minute setup and it won, but it only won to 2 standard deviations. Let's say it had failed. Okay, it failed. Okay, let me see what happened on the higher time frame. We were clearly bearish because blah, 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 whatever the story is. And then you're like, ah, man, we actually were clearly, very, very clearly bearish on the higher time frame, on the hourly, because this had happened or that had happened, whatever the story might be. So it allows you to put the context into this together in your learning curve to where you may not know what you need to look for right now, today. You have no clue what a good setup looks like or a bad setup looks like as you're learning the model. But later on, a month from today, 2 months from today, whenever you recognize already the pattern and you recognize, okay, what's a setup? What's a high probability setup? What's a low probability setup? Once you recognize those things and you can actually put them down on a piece of paper and say, okay, these are all valid setups. You then are going to be thankful that you already have all these pictures next to your setup and say, oh, well, this day was actually bearish because of this or that. So I understand why it's losing here and I understand why it's losing there. Notice I don't have those pictures. I only have two pictures for some of the time frames because those are the ones that I needed context for. The other ones, honestly, didn't need context for because they were very obvious to me. But that's only because I've been doing this already for several months and I'm the one who made the model and I'm putting all the data together and I have thousands of pictures. So I just don't have it on there. But if you're learning and you're brand new to it, you're going to want to just collect it right away so that when you go back and you're already more advanced, you can have the context already and say, all of these setups fail on the 5-minute because the 15 was against it. Or all of the setups fail on the 15 because the hourly was against it. Or all of the setups on the 1 hour failed because the 4 hour was against it, and so on. So it'll give you the context. But yeah, that's the way I would do it. I mean, it's not super complicated. I know some people probably were like, well, this was very obvious. But I get a lot of people asking me, how do you backtest this? Like, how do you actually start taking action? And where do you start researching? So yeah, I would just start with the 5-minute setup and the 15-minute setup, of course. But I would take the pictures on the higher time frames just to get the context. Now, when you're backtesting, don't be biased, okay? And what I mean by that is, like, don't give yourself the best results on the backtest just because you want this to work out or because you believe in it or whatever the case might be. What you want to do is, this is my trading window. So in this trading window, I'm going to take down all the bad setups to the upside and all the bad setups to the downside. So I'm literally going to write down, okay, CI here. There's a 1-minute breaker here in this section. Let me take off the replay. There's a sweepable here in this section. Was there a breaker there? Oh, there was. It's right here. So that's one failed trade. And then it swept again. Is there another breaker here? Let's see. Oh, there is right here. So that's 2 failed trades. And then it goes again. And then this would be the 3rd breaker here. And then finally, the 3rd breaker is, oh no, you know what? This is actually the 3rd breaker here. This little section. So this is actually the 4th breaker. So that's the 4th bullet that this specific day require for me to get a W if I was shorting. So I'll take all of those down. I'll take a screenshot. I'll put bullet 1, 2, 3, and 4. The only reason why I go bullet 1, 2, 3, and 4 is because it actually ended up winning eventually. So I'll take that down. If it never won and this got invalidated, so it would just be bullet 1, 2, and 3, or whatever the case may be. But I'll write all of those down. You'll put a bunch of losses on my sheet, and I'll just learn from that. Well, how many bullet 3s have won? Only 2 or 3 ever. Okay, well then I never have to take bullet 3s because it's a waste of time. It's a waste of money. How many bullet 4s have won? This only happened 4 or 5 times. Okay, well then that's a waste of time. I don't need to ever do that. So all of this data tells you good stuff that you should know about. But yeah, you put it all together and then you start to see, okay, you know, you have huge, massive win streaks. You have a couple losses in between, and then you have some losing streaks as well. And then again, you know, it's kind of sprinkle, but you're gonna start putting the data together and you're gonna start to get a better picture of what good performance is supposed to look like and so on. Now, your performance is never going to be exactly like it was on the back test because, of course, hindsight, like you're marking down all the valid trades that ended up winning and all the valid trades that ended up losing. It's a lot easier to do that than to actually see them live. So you're never going to be as perfect as it is on hindsight. It's just part of the game, but you will get closer and closer and closer. And that's basically your goal. Your goal is to do this so much so that when you see it live, it's so easy to recognize. You don't even have to think about it. Like, it's very second nature. Is this a valid setup? Yes or no? So the only things that you have to actually think about is how high of a probability is it? Is it pretty high? Is it okay? Is it low? Am I willing to risk money on it? But you're not making you're not thinking, is this a valid setup? You automatically will know it's a valid setup because you've seen so many of them. You have so many pictures of them that it's just second nature to you. You don't have to think of whether it's valid or not. All you have to think about is, am I willing to take it? That's the only thing that you're trying to discover when you're on the live markets with the model. But yeah, that's it for today. Thank you for watching. Leave a comment on the video on if this was helpful or not. Should I do more videos of this back testing and so on? I will do some back testing live this week. I'm going to change my stream a little bit this week. I'm going to talk about that on Monday, or sorry, Tuesday, when I go live on Tuesday. But basically what I want to do is I want to be a little bit more like me. I feel like I haven't been putting a lot of my, like what music I listen to, what I do while I'm on the charts and so on. It's just been kind of my chart, and it's just the lo-fi music or whatever, but that's not actually like what I listen to on a regular basis or anything like that. And yeah, I just want to be like watching YouTube videos and just doing stuff that I'm typically doing. I feel like I have been a little bit too stiff, and I think that's part of why I haven't had the best time on the market for the past week, because I was just too stiff. Ever since I started trading on YouTube Live, I just been too stiff. So yeah, I'm gonna be basically doing back testing like I regular would do on a regular trading day. So I'll trade whenever there's no setup. I'll have the trading screen on the other side, and I'll just be back testing live because I'm not wasting my time. I'm not twiddling my thumbs usually whenever there's no setup. Like I'm actually doing other stuff. So yeah, I'll show that, and you guys will, back test with me basically live. So yeah, comment on that. See if let me know if you would enjoy that, if you would learn something from that. And yeah, thank you. Bye.